There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Welcome, Auvorians, to the Saturday, 11/5 November broadcast of the Auvoria Prime Market Watch Weekend Software Strategy and General Markets discussion, and occasionally droning on and tangential paths we go down by yours truly, Steve Vettel, on the mic. Let's talk about the markets. So, for a lot of our foreign students, Auvorians, most of the way I try to present this is from an American investor, from an institutional perspective. Okay, so what I would say is that if you are, living in some other part of the world, you want to follow the same processes, in my opinion. Just cater it more towards the markets that you're trading. Now, in all fairness to global markets, vast majority of some of the biggest traders in the world, they trade U.S. markets on U.S. active market hours time, right? Which can be certainly quite disruptive to one's day or sleep cycle. So, many have adapted. I know there's actually a whole bunch of traders in Asia that will, they have different hours than the rest of the people in the country, right? They trade overnight. And it's a choice. The beauty of the financial markets is whether the planet's falling apart or not, as long as you got a good computer, a intellect, and a absolute burning passion to learn, along with some decent high speed coming into wherever you are, you could trade. I guess I should mention the capital factor as well, right? But that's one of the beauties of this. And whether you're trading the options markets or Forex, you're trading, some sort of binary, which I don't really suggest, or you're trading crypto, I would say good luck to you in that arena right now. Unless you have been short through this period of time, I would say congratulations. There's all kinds of stuff that you could trade, right? So the way that I present this, right, wrong or indifferent, is the way I feel processes should be played out. I give, a fair amount of nuggets each week, and I think I'm not surprised, but I think I'm sometimes just dumbfounded that I'll have, I get DMs all the time. I have people approaching me and questions and this and that. They're either reading blogs or, potentially a client coming to First Down, our investment and money management firm in Florida, or whatever. And they're like, I want to trade. It's like an overwhelming amount of people have come to me over the last 10 years and said, I want to trade. And the first question I will always ask them is, what kind of time do you have? And then obviously the next question is, what's your budget? What types of capital do you have to trade, right? These are two of the single most important questions that you can't just spit out an answer, okay? You've got to sit yourself down. Literally like meditation, in my opinion. Turn everything else off, right? Put your phone down or put it in another room. Literally just go in a room and sit down wherever and just sit in there and think about it. Because honestly, if you put some serious thought into, do I have the time? Do I have the capital, right? And if you have neither, but you have an absolute burning passion and a ridiculous desire, the other two don't matter. Why? Because you'll find the capital and eventually save the capital, you'll find the time. So I would say that those are the first two questions. Depending upon someone's answer to that, I will move to questions related to it, right? You can tell when somebody has just an absolute burning passion. I mean, it's just pouring out of them, right? If you look at some of my early videos, stuff 10 years ago I put up on YouTube, I had a burning passion for trading the futures markets. It's just where I thought millions of dollars could be made. And I did very well trading the markets, and I, spent a lot of money on great stuff over the last couple of decades, right? Trips and you name it, big house, all that stuff. And, honestly, I always thought that, whether you are a religious person or not, if, let's just put it this way, those that have the most success in life, they have call it a subset of them that wants to educate, right? Educate in the right way, right? Educate on a subject that you have passion about. I don't care if it's markets or whatever, sports, I always find that some of the most successful people out there, they have given a ton to, let's just say, the masses for free. It's taken a lot of their time, right? And you could say that's karma. You could say it's not. It's, and however you want to dice it up is fine. But the important thing here is that from a risk perspective, right? One of the most fundamental things you can do to improve your life is to make sure that you do whatever it is you want to do with an absolute burning passion. I mean, like it's grinding away at you, not eating you, right? Not eating up your brain, but it's just motivating you, right? Get off the couch, get up early, go to the gym, whatever it is that you find you need to do, meditate, talk to lots of people, teach children. I mean, the end path is not as important as you putting a mindset to it, right? And you've heard all kinds of gurus talk about this, and that's, they say, I've had more than a few people come to say, hey, you should do like public speaking and all that. The problem is I recognize my faults when it comes to public speaking, right? In some cases, I'm brash. I'm a little too honest. I certainly am not politically correct. That stuff just doesn't do well on a broad stage, right? But at the end of the day, I don't really care. I mean, the point is that I have an absolute mass list of students that have been successful at this because, one, I tried to talk them out of it. Two, they really sat themselves down, he or she, and said, hey, do I have the time, the inclination, the burning passion? Because if you do, finding things like capital and the right mentor to be a sponge off, that's all going to fall in line. It may take some time, and that's fine. But ideally, you want to, and the real question that probably should be asked, I've never sort of explored in any of these discussions and podcasts or videos I've done, is, can you develop that passion? I think you can, but I think there's a certain subset of people that regardless of how much they try, they just don't have the passion, right? Now, I'm not saying you have to have the passion for it. I mean, there are plenty of traders out there that, they like what they do. Maybe they don't have some burning, dying passion for it, but they are mechanically executors at the right time, right? That comes from consistent training, lots of screen time, and finding the right mentors and being a sponge and all that stuff. So, I think that everybody's like, oh, well, Steve, you credit your success to being like smart and this. Nope, I don't credit to any of that because I'm certainly not the smartest guy in the room. And when I started off in this business 20 years ago, I was the dumbest guy in the room with probably a piss load of intellect and maybe half-assed passion, right? Just because I didn't understand the path. But once the path became clear to me, the passion turned massive. And I spent, oodles amount of time learning to trade options in the early days and equities. And, then I got on a big equities desk with Fidelity, a Spartan trading desk. And I got to see how all the big accounts trade, right? Many fallacies of buy and hold were put to death during that summer. I traded on that equities and options desk for the Spartan desk, which was like a high-speed trading system Fidelity had implemented way back in the early 2000s. And, it was just an absolute tell, right? And the tell was most of the idiots on television were saying, oh, well, buy and hold's a way to go and be diversified. Yes, that's true. And most of them were actively trading the shit out of their accounts, right? Peter Lynch, great example, written a book, used to run a Magellan fund, old time guy now, obviously, but guy executed about 11,000 trades in his trust account per year, right? While he was on TV pitching buy and hold. So that's when the early days of, let's just call it my enlightenment among the BS that is broadcast out of the television box or the internet became real. And that's constantly to this day why, from a risk management perspective, I'm always telling you guys, I think it's important you only pay attention to the people that matter, right? I choose to pay attention to people that have made it. I mean, like demonstratable people that have made it, that are very generous with their time. Yes, arguably can say, well, they're talking up their book, and maybe they are, right? But there's a whole bunch of them out there. You can follow some on Twitter, and there's some that write books on the subject, some that may come on some of these television programs, which is a rare time I will watch some of these people, I mean, if Jeffrey Gundlach from Double Line Capital in LA, who I consider one of the best credit investors on this planet, comes on television, I listen, right? Much smarter guy than I. Can help me cut through a whole bunch of research in terms of what's going on with rates, right? Why not? But the list of the individuals that I follow is small. And these are all, in many cases, billionaires or just super smart analysts and traders. Not all billionaires, but the one common thing I think that has helped the guys like Hyman Capital Management and some of the other folks that I follow is that they've been very generous with their education. Okay, so I'm going to let that sort of be the theme of, not everybody is good at educating, right? I'm probably good enough for a more hardcore group. I'm not the best suited to being, on television in front of 10,000 people, because I'll probably piss 30% of them off, right? And those, usually the ones that are angry when you sort of talk about this stuff, are the ones that just get mad because you're basically calling them out and they know they suck, right? And I know that sounds like a terrible thing, but there's a subset of any amount of people out there, they're just unwilling to do the work and thinks it should be handed to them. And that is something I tell many stories. My kids are getting sick of hearing these stories, but it is absolutely forefront in their brains that, you got to work hard for stuff, right? But you can work smart too. You don't have to work like many hours. I still think even if somebody wants to become a serious institutional sized trader at some point, right? Got to put in more hours than most in the beginning because you need the screen time. But you can also find the right mentor to be a sponge from. So that is my beginning diatribe. I will talk no more about this until maybe next week. Any case, so here's last week's news. The only thing I care about, right here. See if I can highlight this without it popping out. All right, there we go. Non-farm employment change 261,000 due to 197. This was a higher beat, but yet the unemployment rate ticked up. Okay. There are as many opinions of these two numbers out there as there is opinions, right? And whether they're calculated correctly and whether they're not. I'm not a fan of the Bureau of Labor and the BLM statistics that come out on this stuff. I'm just not a fan. I think there's a lot more unemployed people in this country that have just flat out left the workforce. They're not being counted one way or the other. So this puts this number at, and it puts us at a sort of bad fork in the road of, hey, are these numbers good or are they bad, right? They're trumped up. They're not necessarily lies like the stuff coming out of China and other countries, but I don't think it's an accurate representation. So if we're going to lift the veil up or the cover and look underneath, what are we looking for? So just keep that in mind. There's really no answer that needs to come out of this. I just want you guys to be suspect of certain stuff. Okay, it's not conspiracy theory based. You can do your own Google research on this. Many high profile investors that think these numbers are BS and so forth. So, but stock market managed to climb off of the canvas essentially after taking a pounding for a while on a hotter than expected jobs report on Friday, right? It remains well behind. Next week's obviously pivotal, so indexes were volatile after the report. At one point erasing a 2% gain. I mean, it's crazy. So Nasdaq turned in the best gain of the major averages as it punched. I think it was like 1.3% higher or something like that. But this is hardly impressive given it was clubbed about 6% lower earlier in the week, right? Now it's back down underneath its 50-day moving average. So S&P also showed some grit. And I'm going to go forward to the new news, but I wanted to just go through some of this market review. So volume rose, and volumes on down days aren't that good. So essentially, the sparring between bulls and bears, came after another hotter than expected jobs report, as I highlighted here, but the higher than expected. So I thought it was interesting. I like to rip on data providers, right, in terms of feeds and quality, but I thought it was interesting. The Onanda senior market analyst, Edward Moyle, last week said that there are silver linings emerging, right? There are a lot of signs that support the labor market will continue to soften here. So he said in a note to clients, quote, service sector hiring has some cracks, and that should weaken going forward. So while the market is now over essentially that painful Fed meeting speed bump, right? If you're not following what took place, 75 bips higher in rates, yes, you're going to start to see all kinds of crazy savings rates and money market rates and, fixed indexed or fixed annuity rates come out, and, just basically a lot higher rates. It's going to make a lot of people's heads spin. Wow, I'm getting, 3.5% of my money that's, just sitting in a money market or a CD or, some sort of fixed annuity rates are about 2% higher than that. That's great. Well, yeah, not if inflation stays at 8.5%, it's great. You're not even making half of what the inflation is. Now, if that number stayed high for a longer period of time, that previous argument I just made would have water, right? If it drops way down to 5%, you're getting 5% on your money on some sort of saving credit-based account, you're breaking even. Your buying power down the road is not being eroded, but you're not gaining either, right? So just keep this in mind when you see higher rates. A lot of people are just clamoring for this stuff. We're seeing a ton of money go into banks and insurance companies for a lot of these fixed annuity rates that are actually pretty good. I saw one close to 6% last week, later in the week after the number came out. I mean, we haven't seen rates like that in 15 years, guys. But also, mortgage rates are up in that area, right? And the inflation rate's running about 8.5, 8, depending on the sector, right? Some it's much lower, some it's higher. Other countries are higher, like the UK, right? Big reason the pound's taking a drubbing, besides some poor monetary and policy making decisions. Overall, at some point this is going to affect the labor markets in a lot of these developed countries, because it's basically just cutting off capital. So if capital starts to get cut off, right? Let's just have a simple macro discussion. Capital gets cut off or severely removed from the system. What happens? There's no improvement. I don't care if it's, Kulik and Soft is selling semiconductor equipment to Intel, or it's Caterpillar selling tractors to build strip malls to, Germany. I mean, it really doesn't matter. The point is there's going to be a retraction. And I think the key to that is that the depth of that retraction, we just don't know, right? global developed markets, including the US, are off anywhere between 20 to 30%. Yes, that is bear market territory. We've talked about that all year. We personally have been quite lucky at First Down because we flat out told clients we don't like the climate at the beginning of the year, and what took place, and just a lot of bad policy making decisions are potentially on the horizon, raising taxes. We're taking you out a lot of stocks, right? It was a great move. It isn't a good move long term if we don't buy back in somewhere near the lows, right? Or else we, in some cases, cost clients tax bills from capital gains we took, right? Just not a smart move if that, in fact, is a fail that we have and we can't get back into the markets lower. I'm confident that markets will probably tank out at some point next year, and we can sift through the ashes. When I do make those moves institutionally in our accounts, I will let you know. But for now, that's kind of how I see all this stuff sort of playing out. And keep in mind also, for those not in the US, our midterm elections are set to take place next week. Everybody's claiming some sort of wave of whatever, depending on what side you pay attention to. So the thing I would say, if you're genuinely wanting to be involved as a citizen of whatever country, the single best thing you can do for yourself is register and vote. So next week I will be in DC. Actually take some pictures for you guys, which is pretty funny. Seeing my ass in DC riding around the subway from the airport. It should be interesting. Anyway, looking at some of these events from the next couple of weeks coming up. Let's look back to the upcoming week. So tonight's spring ahead, fall back. I still don't understand why this exists anymore. Look, I get it. I know all about the farmers and stuff from the old days and the almanac. I've read all that stuff. I still don't see, because by the way, you can farm, those $1 million John Deere machines. Not only can they operate themselves, they can go overnight. They work on GPS. So I don't really see why we need daylight savings time. But we turn the clocks back. Why is that a risk management? Well, if your computers are not set to auto update and your trading software is not set to auto update and any of your algorithms require manual updates and you forget, things can go haywire on you. There's risk, right? So check the times on all your stuff, double check it, triple check it if you need be, and that will help. Do keep in mind, I don't know, actually don't have the, check your email. Let's see if I can pull this up here. Got like a bazillion emails in here, but see if I can find the email to show you guys, because this could be a good opportunity. I really wanted to see them sort of a compilation of periods of time that I think just needed to be calculated in order to sort of come back to you guys. But I'll tell you, some of those Auvoria signals have been doing really well. And I didn't want to really bring out my opinion. I think the problem with the developers, when they look at me at Auvoria, they're like, Steve wants all this long time to tick by until he endorses our product. Yeah, that's probably true. I've told most of those guys that, they have to view getting in love or in the circle with me of trust involves, honest planning and development. But outside of that, the testing has to be accurate and it has to go for a duration of time, okay? Before one puts essentially big money to work, right? I find that even though this may sort of fly in the face of how some of our developers think things should work, many of them are clearly aware that if they were sitting in a room with Jim Simons, okay, this guy's arguably one of the best algo guys on the planet. He's very old now, or any 20 top hedge fund, algorithmic based folks, right? Many of these guys are PhDs, they're in charge of huge portfolios, right? And we put all the sort of hotshot developers in front of them, right? There's some good developers at Auvoria that can certainly sit at this table. But these guys would just be absolutely peppered with questions. At the end of the day, what would really matter the most, I'm not going to log in here. Let's see if I can show you this email. Here we go. All right, so I got a bazillion emails here, but here's the Auvoria one. So Gearbox 2.0 and Pro came out, if you guys could see the screen. So make sure you take a look at this, watch the video. I haven't seen it yet, but I thought this was really cool. So check this out. And again, click on the data. I like how they call it John Wick. That's funny. Look at the win rate on this stuff. I mean, you guys probably know, long-time listeners, win rate's really everything with me. And, you don't need an 80% win rate to do well. So make sure you guys look at this email is all my point here. But you don't need a long win rate historically. You can make money with a 57% win rate if you got the right risk reward set up. So just know that. There are people that make money with a lower than 50% win rate. It just becomes a lot easier to deploy capital and risk management when you're in high 60s, 70s, or God love you 80s, right? So just keep that in mind. All right, so let's take a look at next week. So fall back on the clocks. Congressional elections, obviously this is the big deal. More than likely, this is going to take absolute center stage until Thursday, right? This is the big one, guys, next week. If you are a U.S. resident, by the way, it's a holiday next Friday, if you guys didn't know. So it's Veterans Day, if you guys didn't know that. So bank holidays. I forget if the stock market's closed. You think all the years I've been trading the markets, you think I'd remember what the hell damn day the NYSE is closed, right? So you guys could just Google NYSE holiday hours 22. And I use the NYSE or NASDAQ as the basis for pretty much everything. But this is also a time to pay particular attention if you're going to be trading next Friday of the emails that should be coming out from your brokers. I don't care if they're Forex, futures, whatever, that will break down market hours, what's open, what closes, what's trading on Globex time, that kind of stuff. So just watch for the emails that they're going to send out, and that'll give you a breakdown of this. But essentially holiday Friday. But honestly, past the elections, which is going to drag out for days, as you can probably imagine, this is it, period. Consumer price index year over year, not as month over month, not as important as year over year. See this? We want numbers less than this printing right here. Okay, if we get a tick down in this, right, we're suffering a beating in equity markets, I would not be short these markets. That will be my advice to you, plain and simple. If you are trading index-based stuff on MT4, I would not be short markets. This comes in even slightly cool, this market's going to rip. Right? And this is one of those days, if you're trading the futures markets and you can afford it and you have the capital correctly allocated for risk, you put on, use the S&P, the ES, the mini as an example. I look at the continuous contract right here. Just going to show you the ES. Here's the ES right here. We're looking at this from a daily perspective. Now, obviously, we've got a couple of days to print still before we get to next Thursday. Past the elections, but if we're anywhere near here, which has been some massive support right here at 36, you could do the equivalency of the NASDAQ or the Dow if you're trading those other indexes on MT4. This is the point I would hold, that should hold. But if we get this and we get some sort of much lighter inflation, I don't see it happening, but I'm just giving you guys a plan from a risk standpoint. This is one of those things where you put on like 5-car contract size, take like 1 or 2 off after 10 points, and you leave the rest of them just run. And this was some of my biggest days, would be taking trades where I took most risk off after I got a few points, but I just had a couple of runners. Maybe it was 1 or 2 contracts, in some cases 3. I just let them run for 30, 50. One case I let 4 contracts run for 100 points. Just made an absolute mountain of money that day. I think it was like 30 or 40 G's I made that day. This was a big deal, 10, 15 years ago for me. So, those are fun days. You can have the same types of movements depending on your leverage size in the Forex markets as well. I just love the power of futures. Remember, the E-mini contract is different than the S&P bigs. So I'd encourage you guys, if you want to break down or begin a journey, if you will, I would start with the Chicago Mercantile Exchanges. Why is my password not recognized? I would start with the CME core intro video to trading futures. It's actually really good. They have a whole series. And you don't have to just trade futures on the CME. You could trade the Eurex options if you want. Eurex is actually owned by the American exchanges as well, but it's the European DAX Eurex. There's just some really good videos as well. I forget where they were. I'd give you guys a link to them. So that's what I wanted to cover in Forex Factory. We have not looked in a while at FinViz. So this is the daily screen. Each one of these candles represents a single day. This is a entire dashboard that I highly recommend that you guys look at. And what the dashboard does is it allows us to see correlations and uncorrelations between markets or instruments and how they've done. So you can see NASDAQ weaker than the other markets, right? Because this is more tech heavy, more biotech heavy. Both of those stock sectors have been clobbered. And I thought this was an interesting note. The DAX is absolutely ripped above, testing a quarterly high right here. If you guys are trading anything DAX based or futures, just know that. Tick and spikes up in energy, exception in that gas. Little bit of rip in gold. So we have 1, 2, 3, arguably 4 quad bottom in gold. And that had a real rip effect to it. It's the silver markets. Look at copper. Jesus. What a rip. I wonder what the news was of rip copper. So you should be prepared, huh? Man, they have some real rips and stuff. Look at this cotton chart. Cocoa. It's almost like we were completely dislodged on Friday. Unfortunately, for you looking to buy a house for the 30-year fixed or 15-year fixed, mortgage rates ain't getting any better, folks. They're getting worse. Why? Because look at the prices keep falling on bonds. Price falls, yield rises. It's an inverse relationship. Moving on to currencies. Dollar. Still stuck in that 114.5 to slightly under 110 area. It's been that way for a while. This is a daily chart, right? So as the trading sideways, what I like to call pin action between the highs and the lows, essentially trading full range among the value area in this upper period is continuing to play out sideways, which makes it much more difficult to discern what's going to happen. So when you can't figure out what's going to happen, ideally, in my opinion, you just play the ranges, right? So if you're trading euro, US dollar, what range do you play in? Well, if you're looking at a screen set up similar to mine, somewhere around 97.25, right? It's basically a buck. That's the range I'd be playing in. Get down to the bottom like we saw here. Typically you want to go long. Get to the top. Typically you want to be short. We had an absolute rip. It's a pretty big day, by the way. So lots of stuff is being somewhat dislodged or dislocated that in many cases has been dislodged and dislocated for a long period of time. All right, let's take a look at a pound. So I'm still seeing, if I'm right, remember I could always be wrong, I'm still seeing a 111.50 area all the way to the top here, 116. Still range bound there. Aussie US. Let's take a look at GBP CAD. All right, so I actually want to see this on a weekly chart now. Let's show this to you guys. Reset. There we go. Ideally, I like the whole screen to be the top and the bottom of these ranges when I'm looking at these weekly, so that's why you always see me stretching stuff out. I want to see the whole thing. So, those of you not familiar, this was for policy decision by, we'll just say, an unnamed group of knuckleheads in the UK. Y'all should know who they are. Don't vote for them. Many of them are already gone. But in this particular case, this is a bad policy decision. They quickly corrected. But, in the end, pound's relationship to the Canadian dollar has just been really weak. We've started to see an incredible rally off of an incredibly weak movement, right? I can't say with any confidence, although it's just itching at me, that we're going to see these lows again, because that would be a big move. I'm just telling you guys, this is an incomplete auction. And if you do any studying on auction market theory or its practical application in market profile, incomplete auctions always get revisited. When, how, if, I don't know. Could be wrong, right? But it's just something with me on this move. It's just like, if I was holding big positions in pound, I don't care if it's long or short, I would be nervous, let's just say, with large positions on right now. Because this, to me, seems like at some point it's just going to want to get out and get it, right? A queue clearing move, as I've talked about on both sides, right? So it'd go up and clear the queue up here and then just fly back down, complete the auctioning process, clearing the queue on the bottom. Just saying. Here's the Aussie-Canadian relationship. Notice we're near the bottom. Continued weakness all through the last 2 years. Remember, we're looking at weekly charts here. Gold. Three rips off the bottom, triple bottom, 16-13 area. Will it hold? I don't know. Crypto still continue to be the befuddling market, which just means it is perplexing the movements. It's almost like most traders just left the market. And you can certainly tell, because volumes are lower, right? So there's no great insight in that statement, but it's almost like it just died. It's like it's just there, It's almost like dormant cancer waiting to reemerge and torture you, right? So always be concerned about stuff like that, because in this particular market, you can have an absolute burst one way or the other. So if you're long and it rips up, take some profits if you're on too heavy of a trade. What else do I want to address? Should I take a victory lap on my NVIDIA trade? That's everything else I wanted to address. This thing's just been an absolute monster off the bottom, I must tell you. I know we don't really get into stock discussions here, but I bought right down here at 110. I do not like owning tech stocks in a bear market. But this is, in my opinion, yes, a company whose earnings more than likely will be slightly adjusted, but there's still massive demand for video cards in this planet. Just think these guys could really do no wrong. And, obviously I could be wrong, but when somebody comes to you and says you can buy a brand new BMW M5 competition sport for 1/3 of its price, new, would you do it? This broadcast has not been a recommendation to buy or sell any security, even though I'm fully licensed to do that. I do not do that typically to the masses because I do not understand your situation. And quite frankly, it is risky for someone to trade based upon my discussion if they don't understand their own financial situation, which starts very simply with you asking yourself the question, can I afford to lose this capital? So ponder all these things, do some deep thinking, right? And I wish you guys a great weekend. Have a safe, may the trades be with you. Hug those you love, right? And I'll see you guys on Tuesday. Hopefully, somewhere around 1 o'clock. Be well.